Happy Information Wednesday, Shalise McQueen here. As I mentioned in my little teaser earlier, I'm going to be talking about estate planning and how it, of course, relates to life insurance. So I recently went through this exercise on having a trust done for myself. A little backstory, and this is kind of an intimate conversation, but divorced, no kids, but I have a business and I had surgery recently, and I had to make sure before I had surgery, no matter how routine or minor it was, there's always that chance that you may not wake up. And so I had to have the conversation with my family relating to my life insurance anyways, like, hey, this is what we have going on. This is who it's with, so on and so forth. But the other elements of my life that I've built, my legacy, my home and my bank accounts and my business, all of that was left out of the equation. And so the reality is, if I was to unfortunately have an untimely passing, though all those things would have ended up in the hands of the state through probate. And the reality is, probate on the minimum is a 6-month to 5-year process, depending on how extensive your asset accumulation is. And so in my case, it probably would have been a couple years. And again, who would have challenged those things? Because the great thing about probate is when you don't have something in a trust, anyone and everybody can come forth and say, oh, well, I was promised this, or we had a conversation about that. And so making sure that you avoid all that for your family is super important. So not only is probate lengthy in terms of time frame, it also is costly. Probate costs between 5 and 15%. And obviously, the longer that it goes on, the more attorneys involved, the more hands in the pot, the more costly it gets as well. So yesterday, I definitely prompted myself I've been putting this off for a long time since I've been divorced, and I finally did get but while going through the whole process of naming, of course, who my beneficiaries are and who my power of attorney and my do not resuscitate, person is, which my mom, never thought I'd be 30 something and say, yeah, my mom is my emergency contact, but that's the life that we're in. But part of this whole process was, of course, lining out all my assets. And we also had a conversation on the financial planning of it. Am I setting myself up for my retirement and the ability, if I become disabled, and all those different elements that can happen? I've shared many statistics in the background through all my videos on what happens for fatalities for an auto accident, or, just obviously tomorrow's never guaranteed. And so making sure whatever may come our way, or whether we have a passing or we're disabled, that we do have the appropriate funds to make sure that we have, in-home or long-term care, obviously. And part of that conversation, of course, came in with my life insurance. So I've done very well in making sure that I have adequate life insurance at this stage of my life. I have 2 term policies, and I also have a couple whole life policies, one that's smaller, and I have one that I'm using as a vehicle for my retirement income in the future to help subsidize. And that is that Index Universal Life that I talked about in an earlier episode of The Sexy World of Insurance. So the Index Universal Life is going to help me basically have my face amount, so my death benefit, and also have a separate cash accumulation account that I can use to help subsidize my retirement in the future. So based on how I'm funding it every month, hopefully by the time that I'm 65, retirement age, based on my illustration, I will have enough money in there, like roughly $500,000 that I can use to subsidize my retirement income. Because let's be honest, we've all heard the rumors about Social Security, whether or not it will be there. My bet is hedging into not. And even if I do have Social Security in the future, we know for a fact it's not going to be enough to even remotely touch the ability to maintain a lifestyle. And so part of the estate planning and family planning and talking about life insurance, one of the things I've also discussed in an earlier episode is the survivor calculator, how you're going to structure your life insurance policy, what that life insurance policy is actually going to do for your legacy and your family. Are you making sure that there is no burden left behind? And with that said, one of the big elements is income replacement. And that is making sure that if you have a loss of your spouse, that you do have adequate income to replace the one that you lost with him being or her being gone. And so how I calculated that in the past is, say that we had $1 million life insurance policy and our spouse was making $8,000 a month. And so what we do is we average, if you were to reinvest that entire value back into whatever investment vehicle, is how that investment would actually perform. So based on right now, we're looking at an average of 3.6 return. We call it the 3.6 rule. And if you were to reinvest $1 million and with a 3.6 return, you're looking at a $3,000 monthly income that you're getting from this life insurance policy. Well, when your husband or your wife was making $8,000 and you now have $3,000, you have a $5,000 deficit. And so we like to say at least a 5 to 7 year income replacement. So in theory, we're losing $60,000 a year in income, times 5, 7+ years. And so in that equation, $1 million was not enough to keep the family afloat and have them maintain a lifestyle, have them maintain the mortgage that they have, their educational plans for their kids in the future. And so the whole reason for this discussion really is based around the fact that I did just have this very harsh reality that I did not, even though I have life insurance set up for my family, I didn't have any other protection set up for them. All of my hard work and my legacy, my business, all everything that I have built my entire life would have went to the state to have them decide who gets what and how it's spent and distributed and how it's charged up. And that's not a good feeling. That was a really bad feeling. I left depressed for sure. But the bare minimum, it helped me also reevaluate my investments, making sure that I'm setting myself up for success in my future and my family. And also, of course, having the other side of it, where having my trust established to avoid probate in the future. The biggest misconception is if I have a will, I'm fine. Your will still goes through probate. Your will can and will be challenged. A trust cannot be. And on the topic of being financially set up and responsible for your future, I have this great program that I use, and it basically helps, put into perspective what you currently have going, what assets you have invested, what kind of investments, what you have in your bank account. And it kind of helps us forecast based on inflation and average returns, what that looks like for your future. Are you set up well enough? And so use me as a resource, as always, to make sure that you're on the right path, and you're not going to have a burden down the road for your family if you were to pass on, or even just through into retirement. You're going to be able to keep your lifestyle going and not end up broke at age 72, or end up not being able to go into the home of your choice if that's what happens because you are in Medicaid. And certain homes, group homes or nursing homes, don't accept that. Protecting your family is an absolute responsibility. It is not, and it is a necessity. It's not a luxury. So make sure that you're taking all the steps in place. If you need a great estate planner, I have that as far as the investment side and life insurance, and of course, all your other insurances you have, your personal, your business. I'm your go for that. But please, please, please use me as a resource. That's what I'm here for. As always, you can reach out via email at cmcqueen@farmersagent.com, or always give me a call at 602-525-5665. As always, thanks for tuning in. I know this is not a very fun conversation, but definitely is a necessary one, and it's one that was very instrumental in me making sure I get my stuff in order. So I hope that you guys have a great takeaway from it, and I look forward to seeing you next week. Thanks.